Well, if you think you're paying more, a lot more, for the things you buy these days, you're right. New numbers from StatsCan show the inflation rate is at a nearly 4-year high. So just how much more expensive has the cost of living gotten? Christian Lawrence, a senior strategist with Rabobank, is here to tell us more. And Christian, the numbers came in weaker than expected and still pushed inflation up to 2.3. What is going on here?
That's right. Thank you for having me. But it's quite interesting, really, because inflation actually, as you alluded to, disappointed expectations of a 2.4% print with 2.3% year-on-year inflation. But that was the highest print since October of 2014. And I think one of the worrying things is when you look at the components that are pushing prices higher, it's not really consumers demanding more driving prices up. Instead, it's more from the supply side. So we saw gasoline prices rise 17% compared to last March. We saw mortgage payments up 2.8% year on year. That's the 8th consecutive month that we've seen mortgage payments increase. And we've seen a lot of pressure in terms of mobile phone and internet bills as well. Now, all three of those are things that people need. They can't stop buying those. So what we then see is that really squeezes disposable income in households. And I would actually argue that it's disinflationary further out because it's going to squeeze consumption, stopping people from spending money on other things.
Well, it's funny you say that, because the counter argument to that is that it feels like inflation might have been pent up for a little bit, and then we saw it rise to 2.2. Now it's gone to 2.3. They were expecting 2.4. Is there a risk here that we're seeing the beginning of a trend towards more inflation? You seem to think that the numbers here might not bear that out.
Well, I think that the story I was making is further down the line. Certainly in the coming months, we can see more pressure to the upside in terms of inflation, particularly given that gasoline prices are likely to start continue rising. Of course, we've seen oil prices rise, and as we move into the summer, you tend to see gasoline prices rise anyway. And with the Bank of Canada still trying to raise interest rates, mortgage payments are likely to increase. So I do think in the short term, we're likely to see continued higher inflation. It's just when we look further out, I think that that's really going to start to squeeze consumers, and we'll likely see growth start to slow, particularly, as I said, from the household perspective.
Well, and does that give us some insight into the weaker than expected retail numbers that were released today as well?
Exactly. One thing's for sure, and that's retail sales momentum is certainly slowing. And I think as we look into the second half of this year, it really does paint a more negative picture with respect to Canadian growth. And of course, 2017 was a great year for Canadian growth, but I really think that this is a sign that momentum is now starting to slow. And by the time we get to the end of this year, I think we'll be looking at a growth in 2019 of actually less than 2%.
It's a remarkable picture that's emerging, and all of this really adds to the detail of that picture of an economy that had been chugging along, maybe not growing like gangbusters, but doing pretty well, that appears now to maybe not be finding itself into the...
I've tended to find myself at the more pessimistic end of the scale when it comes to Canadian growth this year, and I certainly think the data that we've seen at the start of the year certainly supports that. The Bank of Canada is hoping that we start to see consumers, but the Bank of Canada has been expecting that for quite some time, and we haven't really seen that rotation, and quite frankly, I don't think we're going to in the coming months.
All right, Christian, we're going to leave it there, but thank you so much for making the time
today. Thank you very much.
Christian Lawrence, senior strategist with Rabobank.